Hi there, welcome back to ET Now. Very good afternoon. You're watching Market Fatafat with me, Kanishka, Sarkar and Ankita, Saxena. This is a show where we'll talk about all the top buzzers in trade today, either on the back of news flow or on the back of technicals. But before we get started, a quick look at how the markets are faring. And Ankita, what a day it was. We hit record highs on both Nifty and Sensex, but looks like a quite a reversal and a U-turn from those levels.
Absolutely, Kanishka. We do see a bit of a correction that's coming in, cooling off, a profit booking perhaps that's happening right now. As far as Nifty is concerned, from the highest point of the day, it's down almost 117 odd points. We're reeling at a pressure of 0.1% on the Nifty. In fact, we are at the lowest point of the day right now. As far as Nifty Bank is concerned, we are seeing Nifty Bank that's holding out in the green, but nonetheless, it's a knock of almost 300 points from the day's highest point. And right now, we are holding on in the green with very, very flat gains coming in on Nifty Bank. As far as Sensex is concerned, Sensex has also turned red. It is trading with cuts of 78 odd points. So Sensex is also trading in the red, and the broader market is seeing a sharper knock at this juncture, with mid caps trading down 0.3% and small caps trading down 0.7% in the trading session right now. So right now they are at the lowest point of the day. That's how the market texture is right now. Profit booking is what we are seeing across board. Advanced decline ratio tilted in the favor of declines in this hour. But let us get on board our guest Ashish Kyal, CEO, Wave Strategy Advisors, joining us on the technicals. Hi Ashish, thank you so much for joining us. And let's get started with all the shows and all the stocks that are in focus then.
Absolutely. So the first stock of today is Whirlpool, which is in focus after a massive block deal that took place. And it's been crashing since then. Nearly 1.5 crore shares amounting to about 11.8% of equity changed hands on the exchanges, triggering a sharp sell-off in the stock. In fact, the stock has tanked almost 11% today. While the buyers and sellers, they remain unknown, have not been disclosed officially yet. So, market chatter does suggest that promoter entity Whirlpool Mauritius Limited was likely going to be the seller. Reports have indicated that a block deal of 95 lakh shares was due. But yes, we have seen a large block deal coming in today. And this isn't the first big promoter offload. That's the word coming in. In fact, in February 2024, Whirlpool Mauritius had sold a stake of about 24% that was worth about 3,880 crore rupees to repay debt. Now, post his expected sale, the promoter holding may slip to around 43.5%, but they will continue to remain the largest shareholder in Whirlpool of India. So yes, that's the reason why this one is in focus, but a sharp sell-off coming on Whirlpool.
All right, Whirlpool in focus on the back of that big block deal that's come through. Let's move on to the next counter. Ashish, you've picked out Bajaj Finance for us. That counter is also declining 1.5% in the trading session. And Bajaj Finance has been, in a consolidative mode. Tell us what to keep on the radar as far as the technicals are concerned. What are the levels to watch out for? Even though there is some news that's also coming in on Bajaj Finance. But first up, tell us what's on the charts.
Hi, afternoon to you and all the viewers. If you look at Bajaj Finance, the stock is up by 2.6% in today's session, and the overall trend, I think, has reversed on the upside. Post the results which was announced on 11th of November, there was some sharp decline and we saw a correction, but I think that is digested and we are again poised for the upside move. We can expect the stock to move back towards the level of 1100 on the upside, and on the downside one can maintain a stop loss for the stock at around 1000 levels.
Sorry, that's Bajaj Finance on the charts. That is a level that we need to watch out for. But let's move on to the next counter that is in focus. It is Emami that was doing pretty well in today's trading session. On the back of a brokerage note by Goldman Sachs, they are maintaining a buy call, and the target price that they have set is 825 rupees. They feel that they have posted a 5.8% FY23-25 revenue CAGR that is above the FMCG sector median. Also, the EBITDA CAGR of 9% has outperformed the peers like HUL, which is sitting at 2.4%. Now, despite the growth, the FY27 estimated PE of 23 times is far below the sector mean of 45.7 times. Now, valuation discount is driven largely by the volatility from its seasonal portfolio. They are also optimistic on the recovery in the second half of FY26 and the brand ramp up in the next 2 to 3 years. On the back of that bullish note from Goldman Sachs, Emami is trading up 2.8% right now.
That's Emami trading nearly 3% higher right now. But Ashish, coming to you, you've picked out ICICI Bank for us. It's been rather muted for ICICI Bank this year. Just about 8% of returns in 2025. Do you think we could see a reversal from here and a larger chunk of gains could be coming for ICICI Bank on the technicals. What are the charts suggesting?
Yes, if you look at ICICI Bank, it has been an underperformer within the banking space. We can clearly see how sharply the PSU banking space has performed, but ICICI Bank is yet to catch up there. And I think it has formed a very important low near the levels of 1354, and it has reversed back on the upside. So the overall tone for the private sector banks and especially ICICI Bank looks to be positive. It can move towards the level of around 1420 on the upside over near term, and on the downside one can maintain a stop loss of 1370 levels.
Okay, so 1420, that's the level that you should be watching out from the upside for ICICI Bank. That's the word coming in, but move on. And we'll talk about car trade now, which is in focus after the company has issued a clarification regarding its potential deal with Girmar Software, the parent company of Car Dekho and Bike Dekho. Now, earlier this month, Car Trade had informed the exchanges that it was in discussions for a possible consolidation of the new and used automotive classified businesses. Now, market reports had even pegged the proposed acquisition of Car Dekho at over $1.2 billion. But today, the company has clarified that both parties have mutually decided not to proceed with the transaction at the current stage. Car Trade has added that it remains fully focused on strengthening its existing portfolio, including Carwale, Bikewale, OLX India and Shriram Auto Mall. Now, the management reiterated that these platforms operate in a large and expanding market and have strong fundamentals and offer significant room for growth. So yes, on the back of this clarification, the stock is in focus today. However, not reacting all that positively. A 4% downtick on the stock, that is Car Trade Tech.
All right, moving on then from Car Trade Tech to another counter that you picked out for us, Ashish, is Madison. Sumi, tell us for Madison, what are you seeing on the charts for this one? That stock is up and away 3% in today's trading session. Even in the last 6 months, it's been an outperformer. So going ahead, what are the levels to watch out for?
Yes, if you look at Madison, the overall stock is up by nearly 3% in today's session as well, and we can clearly see a strong outperformance can continue to come from here also. And the overall sector has been supporting, and for that I think there is a possibility we can see another 3 to 4% rise from the current levels, and the stock can move towards the level of around 52 on the upside, and one can maintain a stop loss of around 44.
All right, so that's Madhusumi on the charts, but let's move on to the next counter that is in focus, and that's Patel Engineering that has received 2 letters of intent for an execution of the excavation and associated works and transport of coal at a project that's located in Bilaspur, Chhattisgarh for Southeastern Coalfields Limited, and the total value of the project is aggregating to 798 crore rupees. On the back of that huge order win for Patel Engineering, that stock is firing on all cylinders today, trading with gains of 14% in the trading session.
That's right. So Patel Engineering up 14% on the back of that big order win, nearly 800 crore rupees over there. But moving on to the next counter, Ashish, you picked out Coromandel International for us. Now, this space has been buzzing, especially because of the US trade deal. But if you take a look at, the charts, not much in the recent time. But yes, this year it has given a return of about 22%. But what is the chart? What are the charts indicating now? Where is the stock headed from here on?
If you look at the stock from 7th of November onwards, it formed a low near the levels of 2095, and since then it has managed to protect its prior day's low, not closing below it since then, and that's a very strong sign of the bullishness that we are seeing steadily, and eventually it's moving higher. On the upside, we can expect the stock to move towards the level of 2420, and on the downside one can maintain a stop loss of 2270 levels.
All right, then. On that note, we'll slip into a very short break. Be right back with more on the other side. Hi there, welcome back to ET. Now you're watching Market Fatafat with me, Kanishka, Sarkar and Ankita, Saxena. Let's talk about another buzzer in trade today. That's Paytm. It has given up its morning gains, but yet it is in the spotlight after a major regulatory development. The Reserve Bank of India has granted final approval to Paytm Payments Service Limited to operate as a payment aggregator. Now, this is a significant milestone for the company. Now, this approval issued on November 26th, that is yesterday, comes barely 3 months after the RBI gave its in-principle nod in August for this move. Now, with the certificate of authorization now in hand, Paytm Payment Services can officially onboard merchants and facilitate online payments for them. The company has said that the growth from this payments business will now start reflecting in its consolidated financials as well. The timing is important too. Why? Because Paytm has been sharpening its strategic focus on expanding the payment side of its business, and this regulatory green light clears a key hurdle. And yes, on the back of this development, the stock has been in focus today, however, not trading as well right now, just about 0.3% uptick over there.
All right, moving on then from Paytm to the next share that is in focus. Ashish, you picked out Indigo for us. Tell us why Indigo and what are the levels to watch out for?
See, if you look at Indigo, it's not only today, but if you look at the overall broader chart of Indigo on the weekly time frame also, I think it has formed a double bottom pattern, and it's going to give a very strong breakout on the upside. The stock has done a lot of time consolidation, and price-wise, we can expect a positive move towards the level of 6,170. On the downside, the support for the stock is going to be around 5780 levels.
Moving on from Indigo Aviation to the next counter that is in focus, that's Sterling and Wilson. The shares are in focus. They have gained almost 3% in early trade today after the company said it had won its second international project from South Africa for 1,310 crores. The company said it has been awarded a turnkey engineering procurement construction or an EPC contract for a 240 megawatts AC solar PV project in South Africa. And with this, the company's total EPC order inflows this fiscal has now exceeded 5,000 crore rupees on the back of this order win. Sterling and Wilson is up and away 1%. It has given him those morning gains, but nonetheless holding out in the green.
All right, so that's Sterling and Wilson. But moving on, Ashish, you've picked out escorts for us. Where do you see the charts headed from here?
See, if you look at this space, I think that has strongly turned on the upside. Escort has given a very good breakout in today's session with good volumes, and it has managed to break above its 3720 resistance also. We can expect the stock to move towards the level of around 3,950 over near term, and one can maintain a stop loss for the stock, which is at the day's low is 3670.
Okay, so 3670, that's the target on the downside that you must watch out for. But moving on to the next stock that is in focus, that's Biocon. This one, because it's biosimilars arm, Biocon Biologics, that has received a VAI classification, that is voluntary action indicated from the US FDA for its Bengaluru drug substance facility. This inspection was conducted between August 26th and September 3rd. It has covered the plant that supplies insulin and biosimilar drugs to the US market. Now, the VAI status essentially means that the observations were minor and the facility meets US FDA's quality and compliance standards, which is an important positive for future approvals and supplies as well. Alongside, Biocon is also making headlines for its potential restructuring moves. The company is evaluating the merger of Biocon Biologics with the parent entity, a deal that could value the biologics arm at around $4.5 billion. Talks are underway. In fact, the company's chairman, Kiran Mazumdar-Shaw, has also confirmed that the group is weighing several strategic routes, IPO or merger or share swap. All of that is being considered. Morgan Stanley has also said that to determine the most value-accretive path for this merger. So yes, that's the reason why Biocon is in focus.
All right, so that's Biocon in focus. Let's move on. Ashish, you picked out the IndusInd Bank for us. Tell us on the charts, what do you see for IndusInd Banks? Because banking names have been the one who have been leading the charge, in this leg of rally as well. But for IndusInd, what do you see on the charts for this one? Because IndusInd has been through considerable ups and downs.
Yes, of course, IndusInd has been an underperformer, but if you look at the charts, I think the stock is forming a very good rounding bottom pattern, and should eventually give a very strong breakout. It has done a lot of consolidation, and I think that's an accumulation, and we can expect the stock to move towards the level of around 950 eventually or much higher. On the downside, the support for the stock is around 828 levels.
All right, moving on from IndusInd Bank to the name in FMCG pack, which is Tata Consumers, that is in focus on the back of a note by Goldman Sachs, where Goldman Sachs says that TCPL is delivering volume growth well ahead of the listed FMCG players. 30% of TCPL's revenue comes from high growth categories like staples, the RTD beverages and condiments. And the company benefits from strong presence in the fastest growing distribution channels. The salt market share has risen 1,000 basis points in 4 to 5 years to 3%. Tata Sampann is scaling rapidly in dry fruits and cold-pressed oils, and the lower tea prices should drive the near-term margin gains in the second half of FY26. Now, TCPL maintains a medium-term margin aspiration of 17 to 20%, and the margin improvement is likely to be driven by operating leverage, cost efficiencies, and mixed upgrades. On the back of a bullish note by Goldman Sachs, TCPL is in focus. It has given up all the morning gains. It is now reeling under selling pressure with cuts of 0.5%.
All right, so that's Tata Consumer reeling under pressure. But Ashish, you've picked out Granules for us. What do you think? Where is the stock headed from here on?
See, if you look at Granules, the stock has shown some kind of a decline in today's level after the forming a high. But I think there is a possibility of an acceptance back above 556. So the stock can move towards the level of 575, which is the prior swing high. And on the downside, the stop loss can be maintained at the levels of 538.
So that's where you could maintain the stop loss. That is Granules for you. But moving on to the counter that is in focus today, that's Ashoka Buildcon as well. Now this one, because its arm has Ashoka Concessions has sold 5 SPVs, that is special purpose vehicles, to Maple Infrastructure Trust for about 1,814 crore rupees. So on the back of this, the stock is in focus, currently trading about 1.5% higher, though it has given up the morning gains that it saw, but still continues to trade on the higher side despite the market having made a U-turn. So yes, this one is holding up well, about 1.5% uptick over there.
All right, that was the last talk for the day. Ashish, thank you so much for taking the time out and joining us and giving us all your picks. But with that, it's a wrap on this edition of Market Fatafat. Kanishka and I will take your leave. Thank you so much for tuning in, but don't go anywhere. Closing trades is coming up next.